Hey everyone, Cash King here, back with another video. And in this video, we're going to be talking about stocks and shares ISAs, what they are, whether they're worth it, and why you should think about getting one. So don't forget to like and comment on the video and subscribe to the channel. And without any further ado, let's get started. Stock ISAs are basically just a type of savings account where your money gets invested into stocks and shares to give you a return on your investment. They are a great way for people to start to invest in the UK into the stock market due to how they're structured for tax purposes and how simple they are to administer. There are, however, certain important rules to follow when using them to ensure that you follow the law. Firstly, it's important to know how much you can put into one. So everyone gets an annual allowance of £20,000. So you don't have to invest £20,000, you can invest £1,000, £2,000, £5,000, but the max you can invest is £20,000. Also, all of the profits or earnings you manage to make on your ISA are tax-free. This is the number one benefit of having a stocks and shares ISA. You do not have to pay tax on the earnings or the interest you make in that ISA in that tax year. Another important thing to know about these ISAs is that there are a couple of different types. So there's one type where you make all of the investment decisions and you're actively managing the funds and the shares that you're purchasing. And there's another where you're more passive and the provider of the ISA is making all of the investment decisions. So here's an example from IG, but many different banks and ISA providers do this as well. So you can see they have a standard share dealing ISA where you make the decisions, and also they have a smart portfolio option where they make all of the decisions around the investments for you so you don't have to do anything. One question people commonly ask when they're thinking about opening a stocks and shares ISA is how does the interest rate compare against average normal savings accounts with banks? And the answer is, well, it depends. If the stock market's doing quite well and you've opened a stocks and shares ISA with a bank, for example, and they're professionally managing it for you, then chances are it will probably do better than your average savings account. But if it's a bear market and it's really not doing that well, and you want to make a lot of your own investment decisions and you've not got a lot of experience, then chances are you might lose money. So it really just does depend on your risk appetite as well as how the stock market is performing more generally. Another important thing to think about when opening a stocks and shares ISA is that you need to shop around for the best available product. A stocks and shares ISA is a product like anything else, and if you look around online, you can find a lot of different providers that each offer their own version of the product. Some websites like isa.co.uk here are really handy because you can compare different ISAs from different providers in a like-for-like way. Some providers do charge much more than others to purchase shares, for example, so it's key to research this before you choose one so that you know all of the costs involved. And also, don't be afraid to call them up if you have any questions about their fees. I've also put some links down in the description box below for you to check out some of these ISA providers directly. Many people who actively manage their own stocks and shares ISAs themselves make sure that they diversify their portfolio. This is really important because if there are certain negative turns or bearish markets in certain sectors, you're protected because your investments are across several different sectors and several different companies or funds. Now, the website Money Saving Expert has some great information on stocks and shares ISAs, and I've put a link to their website in the description box below. On their site, they've got a list of 9 need-to-knows for stocks and shares ISAs, so let's run through some of them. Number 1 mentions that there are a lot of tax advantages to these types of ISAs, and like I said at the beginning of the video, it's the key benefit of these investment vehicles that they are tax-free. Number 2 says that you should invest for at least 5 years to ride out any bumps in the market. To me, 5 years sounds a little bit long, but the principle's fine. Number 3 says that a cash ISA might be better for you if you want a short-term option and don't want to risk losing any money. Yep, sounds good to me. Number 4 says that if you're no longer willing to take a risk with your money, you can transfer your stocks and shares ISA into a cash ISA. Number 5 mentions that you should invest on a regular basis to smooth out any ups and downs in the stock market. I think generally this is a good principle and a good thing to do. And if you had the option of paying into a stocks and shares ISA versus a normal savings account, I'd definitely choose the stocks and shares ISA. Number 6, if you or use your allowance by the 5th of April or lose it. So, yeah, that's very true. Every year, to date, you have an allowance of 20k, but who knows, this might change in future. Number 7, both the platform and the funds you invest in will cost you money. So make sure you do your research. Number 8, just like any other financial product, always keep an eye on charges to make sure you're not overpaying. And lastly, number 9, you can transfer to another stocks and shares ISA. Just watch out for exit fees. So that's it for this video. Thank you very much for watching. Don't forget to leave a like if you found it useful and subscribe to the channel for future content on investing. Best of luck with all of your investments, and I shall catch you next time. Cash King, over and out.